Hello, everyone. This is Mike, your legacy wealth coach, here today to talk about mortgages. Fun. Mortgages are amortized loans, and they work quite differently than what you think most loans would. And we'll go into an example here. Recently, I had a friend who had a nice chunk of change, lump sum payment that he wanted to apply to his mortgage. Now, assuming he had a 4% mortgage, which is just about what rates are now, um, common logic would assume that if you put 10,000 in, you would save 4% on that, and that would be $400. However, because mortgages are amortized, it doesn't work quite that way at all. And let's see why. We're going to use the assumption that the mortgage is $300,000 here. Loan term 30 years, interest rate here is 4%. Pretty standard stuff. What that breaks down to is a $1,432.25 monthly payment. Okay, we're tracking now. If we were to come down here and take a look, what they don't tell you, okay, is right here. Take a look at this payment breakdown. This little pie chart is pretty powerful stuff. Remember, we had a 4% mortgage, but actually, because it's over 30 years, the time value of that money equates to 42% interest, okay? Where on the principal side, the light blue has $300,000. Believe me, the bank will take every penny of that $300,000 back, but in addition, you will pay an extra $215,609 of interest, or almost 42%. I don't know about you, but 42% does not equal 4%, no matter how you cut it. Further breaking it down, we can see here the monthly schedule. And let me just jump over to the Excel spreadsheet. These are the same numbers, okay? We're just using the Excel because I can add up the totals much easier. Now, remember our friend had $10,000 to pay down, okay? Let's assume you made the first month's payment, okay? $1,432.25. Off of the $300,000 balance, hey, guess how much goes to interest? $1,000. You see that first payment? $1,000 to interest. That's out the door, never to come back. What the bank then does is takes the remaining payment, the $432.25, and reduces your principal by that amount, okay? So after paying over $1,400, you've only reduced your balance by $400.32, right? Not a great deal if you ask me. However, remember, our friend's got $10,000 and they're thinking, oh, you know what? Well, I'm gonna save more money. Well, just how much do you save, okay? Now, let's assume the next day or week, okay, he has this money of $10,000. Now we're at $299 and a half. He drops in another $10,000, okay? Now what happens is that brings our ending balance right away, straight down, $299 and a half, all the way down here to $289, okay? $685, let's assume. Close enough, okay? We dropped $10,000 off the balance. That's great, but here's what you don't know, okay? In the middle here, we have, remember, our interest column. This is all the interest that you effectively have saved because you put that $10,000 payment in, okay? And like I said, when you sum it all up, all of these payments actually equate to 23 months ahead do you jump on this mortgage. And effectively, when you sum up all that interest saved, because now they're calculating it off of 289,000, that totals $21,626.82. So $21,500 was saved because you dumped in that $10,000 of lump sum payment, okay? So I don't know where else you can put in 10 and save 21, but yeah, amortized mortgage is where you can do that. So is that a little bit better than the $400 he thought he'd saved on doing this? Absolutely. We're talking 210% return on your money as far as that goes. So anyways, I just wanted to show this to you real quick, the power of amortization and how really it helps the banks. Okay, when you follow and do everything right and pay everything on time, hey, over 23 months, just 2 years, they recoup $21,000, or you pay, right? So if you can skip all this garbage and save yourself 21,000 by putting in 10, I would do that every time. All right, guys, I know that's a lot to unpack. I promise we'll dig into this further. This is the stuff that the banks won't show you, they don't tell you, and we're gonna figure it all out. Until next time, this is your Legacy Wealth Coach, Mike. Thanks for stopping by to listen. Have a great one, and I'll catch you soon.